Hi guys, can you guys hear me? Hi guys, let me know if you can hear me. It's so good to see you guys. I see Ariola, Adebisi. Can you guys hear me? Can you guys hear me? If you can hear me, can you just wave in the comment section? Okay, today we'll be talking about investing and credits, and I'll be doing that with my very amazing guest today, Sifao Sikalu. She's an amazing person. She's walked the path already here in Canada as well. You know, I see Miss Coco, I see Nigerpreneur, I see so many people already. Amazing. Let me request for her to. And I hope we're all doing awesome. Happy Sunday, guys. Hello.
Hi,
Oh, great. I can hear you clearly. How you doing?
I'm doing well. How are you?
Thank you so much for coming. I'm well. Thank you so much. Happy Sunday, guys. I see Shola OG. I see Anil Tanwa. Amazing, amazing. Welcome, guys. And we apologize for the little delay that we had. It was just due to, network and a few things here. Thank you so much, guys, for joining. Okay, we'll get straight into it. So welcome, Sifao. So happy to have you once again. Let's start from the basics. Let's go
Now I can't see
straight.
you.
Oh, you can't see me. Guys,
No,
can you guys see me? I see Amdi, I see Cheta, Chuku. Can you guys see me? If you can you just comment? You can see me. Can you see Sifao? I can see you clearly.
oh, really.
Yeah, I can see you.
Let me see. Okay.
Can you
Yeah.
see me now?
No, really. Oh, I see you on my laptop.
Okay, so somebody says yes. So Cheta says yes. Okay, that's amazing. So I believe it's also network. It's also network. So yeah. Let's dive straight into it so that we can get things going already. Okay, so maybe I should allow you introduce yourself to the people. I already told them your name, but you want to tell them some more about yourself. Let's go.
Okay. Yeah. Good evening, everyone. My name is Sefal Sikalu, and what do you want to know? Okay. So I've been in Canada for over 5 years now, and I have about 18 years background in the financial industry. So I'll say all my life I've worked in the financial industry. And recently, I launched a program that teaches African immigrants how to invest, starting with as little as $10, as little as any amount you have. Just letting us know that we can invest, we can start that journey ourselves, doing it by yourself, not needing a financial background, not needing a financial advisor, and building your way there, building your way to wealth. Because I know this is one thing that is lacking in our community, and that is what we have come here to discuss this evening. Uh, yeah, basically that's me. I'm
Amazing.
married and I have 3 kids.
Thank you so much for that beautiful introduction. And I love the very part where, you mentioned that more like you've walked that path. You've been
Yeah.
here over 5 years. And I believe, again, just like myself, you were confused about the whole financial system. It was more like, what is this I'm hearing, everywhere about some of the buzzwords around the finance, like TFSA, like RRSP. It's like we didn't have this back home, right? So
Yeah.
yeah, I'm happy that you've walked that path and then you've navigated it very well, and you're giving back. That's how I see it. It's like we're giving back to the community. So I see Buchi here. Hey, Buchi, you're welcome. Floxy, thank you so much for letting us know that you can hear us. Thank you, guys. Stick around. There's so much more that is to come tonight. Okay, so like I said, we will be starting from the basics.
Yeah.
So let's talk about what investing really is. And again, let's talk about what savings is. I know people understand savings, but at this point, I think we need to really differentiate it for people because it seems like the everyday person I get to speak with, they're still kind of confused. Like, you guys are saying investing. Is my money not in the bank? That's still investing, right? So, what is investing? What is savings? And how does it, differ from one and like what's the difference between savings and then investing? And should I be putting my money in the bank or where exactly should I be putting my money? Let's dissect that topic here.
Okay, so thank you for that question. For savings, so I'm going to differentiate between savings and investing first. Savings is you putting aside money, keeping it safe. Just imagine that word. Remove the ing and put safe. You want to keep something safe. That means you're keeping it in a safe location. You're keeping it in a safe compartment. You're keeping it in a safe box. That is you doing saving. Investing, on the other hand, is still taking that money you've saved and actually make it work for you. So now, when you save, you put it in a compartment, you lock it up there, right? But when you invest, you decide to take that money you've saved and put it in the market, put it where you're going to get good returns for your money. Now, when you're saving because it is safe. You do not want to take any risk, right? But when you're investing, your risk goes up a bit because when you invest, there's tendency that your money would grow. There's also tendency that your money would reduce in the market, right? So if you want to save, that means you don't want to grow anything. But on the other hand, you're also losing to the market. And the risk you're taking by saving alone is the risk of inflation. Because if you put $100 down today and inflation is about 3% or 4%, now it means your money has reduced by 4% because of inflation. The buying power has reduced by 4%. But if you put it in the market, there's tendency for that money to grow to 20%, 30%, and there's also tendency for you to lose the money. However, if you want to save, you need to determine what are you saving for, because there are cases where savings is very important. We're not ruling out the savings habits, right? Let's say you're saving, you want to put something for your emergency fund. That is good for savings because you can liquidate it. You're not under any pressure. If there's an emergency, you can go to that your safe box and pull out your money. Your money will still be complete, right? But if you're saving for emergency and you decide to put it in a volatile investment, by the time there's an emergency, you might be tempted to sell it at a lower price and make loss. So when you're saving, you need to know, why am I saving? If I'm saving for emergency, yes, you're going to be using a savings. You're going to be saving for that. But if you're not saving for emergency, maybe you're putting it aside for the future, you're putting it to use it in the next 5 years to buy your house in the next, for a long time goal, right? Then it's good for you to put it towards investing because the money will be able to work for you. And what do I mean by money working for you? It means the money will generate money. The money is going to get pregnant, give birth to babies. The babies will give birth to babies. The babies will give birth to babies. That is what the power of investing does for you. So that's just the simple difference between you saving and investing. But know your goal. It is very important to know your goal before you choose, do I want to save this or do I want to invest it?
Excellent. Thank you so much. I love relatable examples. And just before I go into your examples that you used, the one thing I took out of that whole explanation was the fact that inflation now is staring at us in the face. And that's like the silent killer, because
Yeah.
if you save your money and it's not working for you, you're not putting it to work, it literally means your $100 of today, your $50 of today could just become $20 tomorrow simply because of that inflation. I see
Okay.
Eddie here. I see Sumbo. Guys, thank you so much for joining. You guys are amazing. Stick around, ask questions in the comment section, and we will surely get to that as we go here. I love what Floxy is saying here. She's throwing in some light as well. Savings is just, putting your profile in one place without an additional interest to it. That's amazing. And the example about the, giving birth to babies, more like, I believe you're talking compounding there and all of
Yeah.
that. So that's amazing. So that people can relate here. We want to make it as simple as possible, speaking in plain English, just so the common man can understand exactly why this topic is very important. Okay, I will move on to the next question here. I'm looking at the chat box. If we have any question, please feel free, drop it here and we will, touch on that as well. Okay, so why the next question would be, why is it important for immigrants to build wealth? Again, we've explained what investing is. We've tried to separate it from savings. You talked about even your goals before you can say which or what to do. Now, why do we think it's really important for immigrants to build wealth? I've spoken to several people again, and I hear some say, "Hey, I'm not building any wealth. Whatever it is I make, I will just eat everything. Let my children or let whoever is coming behind sort themselves out." I want us to talk today here, and I'd like for the people in the comments as well to, chime in. Just put in some comments there. Why is investing really important? Why should an immigrant come here and consider growing wealth?
Okay. Yes. So thank you for that. And thank you, Floxy, for your contribution as well. So why is it important for immigrants to build wealth? So what is wealth in the first place? Wealth is where you get to, that you have that freedom. I want to travel today. I can travel and I can pay that flight fee 10 times over and still have more. I'm not under any pressure. That is wealth. So when you're wealthy, there's this peace that comes to you, right? You're not bothered of what do I want to eat tomorrow. You're not bothered that, oh, my children want to go to school tomorrow. How do I pay for their school fees? That is you building that wealth. You will not get there one day, right? You will build it bit by bit. And as immigrants, we've immigrated to different part of the world. We've left our home, which means we've left our comfort. We've left everything back home. Now you're in a new country. You need to start building that wealth because it will come to a time you will want to work, but your body will not be able to work.
Mm.
At that time, do you want to rely only on pension? Because if you want to keep living the lifestyle that you're living now, like maybe you love traveling, and at retirement, you said you want to travel, pension alone cannot make you live that kind of life. You need something extra to be able to add to that pension. And that is the wealth you're building today. You're putting aside something today because you know as you put it aside today, you're going to use it in the future. And you also know at the back of your mind that there will be a time, either we like it or not, as long as you stay alive, there will be a time you will not be able to do that for the hour. You will not even be able to do a 10-hour shift, right? And at that time, what do you want to rely on?
Mm.
What do you want to rely on? The truth is there's going to be pension, but will the pension be enough for you then? And when money stress is out of your life, sis, you will live long.
Come
If
on.
money stress, I am telling you, you
I
can look at
love
the
that.
wealthy people. You would because you'll be able to eat good food. You are not thinking of, oh, I want to buy this fruit. They said it's $100, but I only have $50. Then you start thinking. And that takes a lot of things out of you. Even if there's medical condition, you have good money, you will go to good hospital. Good doctors will attend to you
That's
because
right.
you're wealthy, right? That is the reason we need to start putting something aside. It gives you that freedom, just that freedom, that peace of mind alone is enough for us to think of, I want to build wealth, right? That freedom, that peace of mind alone is enough. And you're in a new country, like I said, you need to understand that as I'm in a new country, I need to set my future aright. I need to understand that, oh, I'm going to retire one day. I'm going to need this money one day. Even before retirement, there are certain things you want to do now. Maybe I want to travel to 7 countries in the next 3 years. I can start planning it now, right? I can start planning that travel, that journey now and say, okay, every month I'm going to be putting this aside to travel. I don't know. Maybe I love traveling. Maybe that's why I'm using traveling. Yes. So, yeah, maybe that's why. But it might be your priority might be, oh, I want to celebrate my 50th birthday in a grand style. That may be the joy that you have, that may be what brings satisfaction to you. If you don't have that wealth, if you don't have that money, you put yourself under unnecessary stress. And how can you do it? Start putting something aside from today, as little as it is. Put it, let it begin to compound. You will be surprised what your money can do for you when you invest it in the right investments.
Wow, that is so amazing. And I pinned the comments from my sis here when he talks with Buchi. I'm so glad she's here. I mean, we have so many people who can speak on this same topic because we really need to make as many people as we have preach this a simple gospel of investing, building wealth, setting our finances aright. You know, just think about the way we have so many pastors just preaching about salvation. I know we're not preaching here, but just kind of trying to tie a very vivid example for us to understand why it's important for us as immigrants to be aware, to be conscious about the need for this financial education, understanding what to do, what not to do, and how to build wealth. I love all the examples, and I suspect you very much. You have plans of traveling soon. I can tell you that's part of your goals because you were
Of
talking
course,
so much
I'm going
about
to tell
travel.
the world is in
So
my goal.
you need to tell us: are you going to Mexico? Is it Cancun? Where's the next place? Or
Well,
you're visiting
I'm
Nigeria?
planning to come. No, not Nigeria. I've lived in Nigeria all my life. So I'm planning Mexico. I think I've not been to Mexico, so
That would
I'm
be
planning Mexico.
amazing. We can do a group trip to Mexico, right? Buchi will be
Yeah,
down with that. Okay, so I love this comment about Buchi. I'm just going to read it here. It says you need to invest so you have financial freedom, which is what you also talked about earlier. You know, you want to travel, you don't need to start scratching your head because you just need to go to the to the US that is right beside us here. You need to have the option to do what you want to do. You need to be able to trade your time for money, like you just want to do so much. Like tomorrow morning, you could feel like, you know what, I should go to Houston, Texas or something. You don't need to start saying, I need to take vacation. I need to apply with my boss, even give me the vacation. You know,
vacation.
who is going to stay at my store? Let's say you even have a store. So there's levels to the financial freedom that we're talking about. And that's why as immigrants, I really love this topic. I'm passionate about this topic about money, this topic about investing and whatnot. So we'll be moving on here. And guys, like I said, questions come in, chime in to it. You see, I pinned a comment here because it's an interesting comment. So drop in your
Yes,
comments.
sorry, before you go ahead, there's a
Yeah.
comment from Somebozy too. I think I hope I'm right. It
Oh,
says
I must have
sometimes
missed
it's
it.
mindset thing. So many people just want to survive first, which is good, but building what is to most people seems far. Yes, it's good to always survive first, but as you're surviving, have the mindset to start putting something aside. Like I said, no matter how little, it is a mindset thing. If in that your survivor state, you're trying to put, even if it's $1, right?
Yeah.
Discipline. By the time you leave that survivor stage, you will be able to do more than what you're currently doing. And again, when you're on that survivor stage, if you start putting that $10 aside, that $15 aside, right? When you see that $15 give birth to babies, it's giving birth to 16, it's now becoming 17, it opens your mind. It opens your mind because you want to put more money. You can see the power of your money working for you. So what do you want? It opens your mind to say, oh, if this $15 can turn to $17, that means if I put $100, it can become 150, right? And it opens up your mind for you to now say, what can I do? And once you start asking yourself that question, what can I do extra to leave this stage? Believe me, things will come to your mind that you can do to leave that survivor stage. But if you don't discipline yourself from that survivor stage, you would always remain at the survivor stage. And thank you for the comments.
Thank you so much for that one comment. I mean, it starts from that mindset, and you couldn't have said it any better. Because how do you tell somebody start investing, and then the person just blocks their mind off and says, whatever you say, I'm not doing this investment or I'm not
Yeah,
investing. And I love that compounding example so much because again, it shows you what is really possible. It shows you how much more your money can even work for you. Because again, the work we go to every day, the 9 to 5 or whatever business it is, you put in so much work and you just get
that's true.
the peanuts or the salary. But how about if they show you where you can put that same money you're earning from there and then put it somewhere that can yield even much more and then give birth to babies like you're explaining? It's super amazing. And we will still talk more as we go along on this life about the realities that we seen here, you know, as immigrants, which is different from back home. And that's why it's important that building wealth doesn't have to do with whether you have so much right now. You just need to make sure you're setting something aside for yourself. So there's a question I see in the chat box. It says, I'm a new from Real Sazi Jazzy. I'm a new immigrant. How do I begin investing without any knowledge? I think we should take that question before we go into our next question here. I love engaging chats like this. Yes, guys, more questions, drop it in the chat.
Okay, so New Jersey, right? Because I didn't say the question. That would be in US, right?
No, the name is the Real Sazi Jazzy.
Oh,
Yeah,
okay. How
I'm
do
a
you
new
begin
immigrant. How
investing?
do I
Oh, okay.
begin investing without any knowledge?
Oh, that's a good question.
Yeah.
So you can begin investing without any knowledge because investing has been made so simple, right? So if what you need is a brokerage app. So if you're in Canada, you can just download World Simple, very beginner friendly, right? Download your World Simple account. When you download the World Simple account, you're going to create your profile. So for the people that are not in Canada, if you're in the US, you can download Fidelity, you can do Robinhood. If you're in UK, you're going to be downloading Trading 212. If you're in Africa, download Bamboo. These are all beginner friendly, right? When you download this app, you create your profile. Create a profile on the app. To create a profile, you need your name, your birth date, your address, and you need your social insurance number or tax identification number. It is important because investment is a taxable item. So when you create that profile, when you're done, you need to choose an account for you use to invest. Now, in choosing the account to invest with, start with a non-taxable account. So I'm talking to you as an immigrant, or if you've never invested before, start with a non-taxable account. And I'll tell you the reason I say start with a non-taxable account. Non-taxable account gives you that leverage to save on taxes. So let's say you put $10,000 in your non-taxable account, you invest it in the market, and you make $1,000 gain, right? That means if you decide to liquidate your investment, liquidation means you're withdrawing your fund, you're selling off your investment. You sell off your investment, that means you have 11,000. Remember, you put 10,000, you make 1,000 on it. Example. That means you go home with 11,000. If person B, Mr. B, uses the same 10,000 in the market and puts it in a taxable account, that person would make the same 1,000, but because they are using a taxable account, the 1,000 will be taxed. That means they go home with less money. You, as a new immigrant, you can start with a non-taxable account. If you're in Canada, use TFSA, tax-free savings account. I'm going to come to the point that you don't just put money there and leave it. But if you're in US, use your Roth IRA. If you're in UK, shares and stock ISA. Use it. Now, when you choose this type of account, when you fund your account, because you're going to be funding it, right? When you fund your account, you don't just stop there, because that is where most people just stop and say, oh, I've put money in my TFSA account. I believe it's working. It is not working. TFSA account is just like your savings account. The only difference is when you invest through your TFSA account, you are not paying taxes on your returns, on the income or the gain you make in the market, right? So you're going to be going further, which is the aspect I believe she's talking now, right? So you will need to buy an investment. In buying an investment, in buying something from the market, depending on your goal, remember. So I'm not talking about savings now. I'm talking about you investing in the stock market, you making your money work for you, right? So if you're going to be investing in the stock market, you can either buy the stock or you can buy an ETF. If you're buying a stock, that means you're investing in just one company. I want to invest in Apple, one company. I want to invest in Google, one company. That's me buying the stock of the company. But I can decide to buy an ETF, which is exchange traded fund, meaning you're buying a basket of different companies in it. I like to use layman example so that we can record it in our brain. Maybe that's the way I like simple things.
I like
So I'm
it.
going to use this layman example. So let's say I go to the store. I go to Walmart, for instance. I go to Walmart to buy fruits. I get to Walmart, I buy orange and get home. The orange is bad. I have bought a stock. I have just bought one fruit and gone home. If I get home, the orange is bad, what happens? I don't have any fruits to eat, right? But I can go to that same Walmart. Walmart in this case represent our stock market. And I'm going to the stock market with my brokerage app that I've opened. I've created my investment account. I can go to the same Walmart and buy a basket of different fruits, orange, banana, pineapple in that basket. I get home, the orange is bad. What do I have? I still have other fruit, pineapple, lemon in that basket. That is me buying an ETF, right? So as a beginner, for you to start learning, start with an ETF. Four reasons why I like to tell people to start with an ETF. Number one, it's lowered risk. You've lowered your risk. Imagine that case of going to the store to buy just one orange. High risk. I get home, the orange is bad. I don't have anything. It's the same thing. But if I buy that basket, I have lowered my risk by giving myself options of other fruits in that basket, right? ETF. Second reason, it is diversified. Diversified means you're spreading your risk cross board. Meaning, when I go to that store and I buy that basket of fruits, I have spread my risk to say, if orange is bad, pineapple will be there. If pineapple is bad, banana will be there. If banana is bad, I still have other things in there. So in an ETF basket, you have different companies. Some will be in technology sector, some will be in financials, some will be in utilities, some will be in consumer goods, right? Meaning if technology is not doing well, I still have consumer goods, I have utility, I have telecom in that basket. It holds my basket for me, right? And number three reason, it is managed. When I say managed, it means there are some people that are supervising the funds in that basket. Some people, just like the way you wake 9 to 5, you wake in the morning, go to your 9 to 5, and you go to IT. You go and do your job. You go and do your care job. Some people, their 9 to 5 is to come and monitor that basket to be sure that the funds in that basket are performing to the expectation. So already you as a beginner, somebody as professionals have managed the basket and said, oh, the fund in this basket, they are good. They are doing well. So what does it give you? It gives you confidence in the market. And number four, you're paying just one fee to assess everything in that basket is one fee. It won't say because you have 2,000 stocks in it, you now need to buy each of them. No, you're paying one fee to assess those baskets. So as a beginner, download your app, choose an account, which is an investment account. The next thing is, I like to say start with an ETF because you don't understand the market yet. But don't stop there. Now, the next thing is, as you have bought that ETF, you're buying the ETF just to see what the market is doing, right? See what the market is doing. You're seeing it as it's growing. As it's growing, begin to learn the market because you need to understand to read the charts. You're not just going to stay with ETF. There will be times you will need to buy individual stocks, right? There will be times you will need to diversify into other part of the stock market, like gold, like silver, like cryptocurrencies, right? So you will now begin to learn. But because you've bought an ETF and you've seen the possibility in the market, it gives you the edge to want to say, oh, I need to learn more about the stock market. I hope I answered your question.
Excellently well. I love all the, explanation, very action focused as well, and very simple to understand. And guys, drop questions. Like I said, you already touched on a lot of other follow-up questions that I, would have also loved to ask you. So very quickly again, let's talk about how much do they really need to start with? Now, as a beginner, we've talked about what is investing in case you're just joining. I see my sis here, Harry, Genesis, Adele B, Opum. You guys are welcome. Feel free to ask questions, chime in, drop in suggestions, whatever you think, would add value to this conversation. Please drop it in the comment section as well. So like I was saying, we talked on about investing, the difference between savings. Now we've talked about now the person is ready to invest. The mindset is right. How should I go about it? Go open a brokerage account. Try to leverage your tax-free savings account. I think it's high time the government changed the name of that account. It is actually supposed to be a tax-free investing account, not savings. Because
Yes. I think
That's a lot of
that's
confusion people
confusing.
get when they come
Mhm.
into
Yeah,
Canada. And that happened to me as well. And
as
I
well.
believe
Oh,
we're many on the table here. I mean, coming to a new country, there's a lot of the jargon words that we don't understand very much simply because we were not born here, right? So, yeah.
yeah.
And I'm happy that I was able to navigate that at some point as well. And I hope that everybody on this call, one thing you take out of here is if you have not done anything about building wealth, getting yourself financially literate, not understanding how this whole system works, this would be one place where you should take action right after this call. And we'll still get into that because if I actually have a course, she has a program that can build you from 0 to 100. And we will get to that very shortly. So please quickly tell us how much, because I know we've talked about mindset. Somebody would be saying, come, this investing is for the wealthy people, it's for the rich, rich people. You guys have money. That's why you're talking investing. We need to demystify that part for the people as well. So let them know how much should they even start off with to
$1.
invest.
Start
Fantastic.
with
Guys, did you
$1.
guys just hear that?
Any
One
amount you have.
dollars.
Start with
So
any amount you have. Sorry, before you go ahead, I like to tell my story a lot, right? So when
lovely. Yeah.
I came to Canada in the thick of COVID. Like immediately, the first flights, when they lifted that ban that flights could start leaving from countries, that was when myself and my family came to Canada. And that was, we used the chartered flights. Some people that were trying to come to Canada in 2020,
Yes, I
we knew
understand
the
totally.
chartered flights then. So most of our proof of fund went to chartered flights. A family of five, I think we paid close to 12 million naira then,
Wow.
just for flights because it was chartered, right? So most of our proof of fund went to with flight money. But we came to Canada. And when we came, I didn't get a job. I didn't get a job for like 4 months. I came in July. I didn't start working till like December, early December. So you could imagine. But when I started working, I could only afford $50 every month to set aside. $50. And I said, because I've always had a mindset of investing anyway. That $50, and I bought a real estate investment trust. That's the shares for real estate. And the shares pays every month. They pay dividend every month. The following month, I saw a dividend. It was small, but it opened my mindset. It opened the possibility of me investing in Canada. Right now, I tell you, start with whatever amount you have. It is going to be difficult for you to say, oh, I want to start with $10 if you have not started investing or you've not even started saving. I want to start with $20. Your mind will conceive it is much, it's big, right? So I tell people, sorry, I'm going to use layman example again.
I love it. Please use the layman
So
example.
I tell you that if you work 40 hours a week, even if it's 20 hours a week, and you say, oh, I work 40 hours a week, right? And I'm earning $10 per hour. I know most people don't earn $10 per hour, but let's say you're earning $10 per hour. Tell yourself that from these 40 hours I'm working a week, I'm going to put 1 hour pay aside, just 1 hour every week. From my 40 hours, I'll put out 1 hour of my pay. So if I'm earning $10, that means I'll put aside $10 every week. Your mind would conceive it because your mind will say, oh, 40 hours is much. If I take 1 hour out of it, right? It's more. So your mind will be able to achieve that. So start with just 1 hour pay. If your 1 hour pay is $5, start with it. And the beauty of this app you're downloading now, or your investment app or your brokerage app is start with whatever amount you have. Buy a fraction, put it in your portfolio. Buy a fraction, put it in your portfolio. At the end of 52 weeks, if you're doing that $10 every week, you have done $520 at the end of 1 year, 52 weeks. Now, just imagine that you now put that $520, you put it in an investment that gives you a 10% return. Imagine, right? An investment that gives you a 10% return. That means at the end of the year, your return will be $52 on a $520 investment. There is no savings account that will give you that.
That's mind blowing.
Yeah.
Yeah,
So start with
amazing.
1 hour pay. Or even if you can't afford 1 hour pay, start with $1. Just put the $1 there.
Just start. We need to build on the momentum. So just
Yes.
start with the $1. And I bet everybody on this call can afford $1. And I say that because we paid for the data that we're using currently, and this is charged on a monthly basis. So that tells me that $1 we can afford. So understand what Sifao is saying right now, just to consolidate on that more, is more of having that mindset to build wealth, which pushes you beyond your limits to say, hey, I know I'm not having so much right now. I know it seemed like there's no extra fund or discretionary fund I can put aside, but I am willing to try this. And if you put the $1, when you see dividends, I get dividends like monthly. It just comes in, and there's something it does, because humans, we're psychological beings, right? There's something
Yeah.
it does with your brain. It shows you what is possible. You want to do more, because if you get even one kobo or $1, sorry, or 1 cent as a dividend, I bet you the next month you want to double on that fund, just so you can
That's true.
turn it into 2 cents. So that's the spirit. That's what we want us to really have. Be intentional about building wealth in this season. Thank you so much. And for your example, it was so relatable. I felt emotional because I had, friends. We were supposed to come at that point, but my last baby came about that time. So
Oh,
we couldn't make it. So, and at this point now, I think I should be saying thank you, Lord, because that's a lot of money. That's
yeah.
a lot of money for that flight, and I'm happy. I mean, even with everything you had to pay for just the flight, you were still able to set aside that $50. That story, there's a reason for it, and I believe somebody here would be touched with that, to make that move, to do something about their finances today. So thank you so much for that. I'll go to the next question before we get to the topics of credit, because that's also a major, major, major one for us as immigrants here. Now, when you say put $1, I have put $1.
Hmm.
For example, I got dividends when I put my $1, because I love, in as much as I love income, growth stocks,
Great.
I love dividend stocks, because it's like some passive income coming somewhere that I can
That's
use
true.
to do something, right? So now, if I have put in that $1, for
Hmm.
example, I get a dividend the coming month, depending on the stock or the ETF or the REIT that I choose, and I intend to not spend that money. Can you just touch on what I need to do to make sure that giving birth to babies, that example that you gave us, that compounding stuff,
So you
how
can
do
have
we do
grandchildren.
that? Exactly. How do we do that? And just to welcome the people that are joining again, I see Anjori, welcome, Sammy Rubo, Double O Cheek, I love that name. Thank you for joining. Tenji We Juliet, amazing people. Thank you guys for tuning in, dropping questions, your comments. Tell us what you think right now. If you think we're doing amazing, you can put that there as well. If you think this is not good enough, why not? Drop it in the comment section. We love feedback. So yeah, you can take that question away.
Okay. Yes. So when you invest in the markets, just like you said, you can either invest for growth, that means you want your capital to grow fast in the market, or you can invest for dividends, which become income. That means you're getting income paid to you, just like you earn your salary. You open your app in the morning and you say, oh, this company has paid me, right? That is your money working for you. Now you have two options, right? You can decide to withdraw out the money that is paid to you, because it's paid to you in cash. It's just sitting in your account, right? In your brokerage account. You can decide to withdraw it to do, maybe your goal is to use it to fund some income, some expenses, right? Maybe some bills for the month. However, if you want to grow your money faster, the best way to grow your money faster is to reinvest that dividend. So the apps has even given you that option for you to automatically reinvest the dividend, because they know the human psychology that if you put the money there as cash and you're looking at it, temptation might come that, you remember the Gucci bag you want to buy. You remember the Guess bag you want to buy, right? But
Yeah.
because you can reinvest it, just choose that option. And all you get is a notification. This company has paid you $200 dividend. The next notification you get before you close your eyes and open it is your $200 has been reinvested back into the market. So that Gucci bag you want to buy, you say, okay, Gucci bag, please relax. And that is how you build your money in the market, right? Because when you invest that, let's say you get a $200 dividend, right? Currently, you have maybe 100 stocks in that company, and the 100 stocks paid you that $200. Now, that $200, when you reinvest it back into the market, into that stock, You might use that $200 to get maybe 20 stocks, right? What do you now have? You now have 120 stocks. It means the next dividend that is coming is not coming on 100 stocks, it's coming on 120 stocks because you've decided to reinvest your money in the market. And that is what compounding, that is how you compound in investing. You reinvest any income you make, you reinvest it in the market, and it compounds your money for you. And you cannot beat the power of compound interest. You cannot beat it. If you want to try it, go to the internet or your Google and just put compound interest calculator and see what compound interest can do for you. You cannot beat the power of compound interest. For somebody that is compounding, that has decided to reinvest their dividends, your money will go faster than somebody that is just withdrawing their dividend. However, like I said, do your goals. There are times that I have a dividend right now, I have a stock right now that I'm using to pay for my phone bill in 2026. That is simple.
I
The
love
dividend,
that.
I'm going to do a video that is coming out this
I
week.
love
The
that.
stock pays for my phone bill.
I love
My
that.
phone bill is $40. This stock pays dividend every month, and I've done my calculation. If I invest this amount, I'm going to get $40 out minimum every month. That means it takes off my phone bill, right? But I have other investment that I reinvest. So do your goals. Why am I investing? There are times that things might be tight, or you just think this investment, let me just use it to fund this bill, right? Or you can decide to reinvest. But if you want to compound your money, you want your money to grow fast in the market, then reinvestment is the best option for you if you can.
I love, 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 love this topic. I'm so excited anytime there is discussion about money. I love money. I don't think it's a sin to love money, right? Even the
Nobody
Bible
hates
says money
money.
is a defense. So we need to talk more about money. Amazing. So I see a comment from Sumbil too. You both are amazing. Thank you very
Thank you
much.
very much.
Thank you. That's amazing to hear. Okay, so there's a question here that says, can you talk on the difference between this dividend investing and segregated funds? Which is better, or what would you advise? I think I can answer that, Sifao, if that's
Okay.
okay. Okay.
Yeah, please go
So
ahead.
she already explained a little about dividend investing. So think about it this way, that you invest your money, but that money is paying you dividend. Dividend is like the profits the company made over a period of 1 year,
Mm-hmm.
and then they pay you from that money that they've made. Sometimes they could pay you monthly depending on the company. Some could pay you quarterly. Some could even pay you yearly. So it
Yeah,
depends. But like she also mentioned earlier, when you are buying your stocks and you get into the charts and the candles, you're able to see and interpret what each of those stocks have for you. Meaning, oh, this stock, is it paying me monthly? Is it going to pay me dividend monthly? Or are these people paying quarterly? All of those will form your decision as to buying that stock. Again, tied to your goals, because we need to know why you are investing. She gave
investing.
a sweet example that I love, to use some of the dividends she's getting to pay her phone bills monthly. So if I have that same goal, I will be looking for dividend stocks that pay out monthly. That's
That's
why
right.
you need to be clear on your goals. Very important. So dividend investing, again, in simple ABC language, is saying I'm putting my money where they will be paying me something at least every month or every quarter or every year. Now let's go into segregated funds before we marry the two and begin to talk about which is good. Now, segregated funds also are still invested in the stock market. They could be using it to buy index funds, ETFs, REITs, think about whatever it is. But now, because these segregated funds are sold by the insurance companies, they are binded by a contract. And what that simply means is that your money is preserved, the capital is preserved. It depends on the type of seg funds you buy. It could be the one that is 75 over 100 or 100, meaning whatever it is that goes wrong in the market, at least 75% of my funds, I must still be able to get it back. If it's the 100 you got when you were getting yours, binded by the contract, again, it means all the money I put inside, nothing is ever going to go wrong with it. And that comes a little cost. But I tell people again, whatever gives you value, you should be able to pay for that value. So if I'm going to the market to buy a Michael Kors bag or a Gucci bag or a Louis Vuitton bag, whatever the name is, each of these names have classes. They have their ranges. A no-name bag can just be maybe $10. But the one that would be sold for $1,000, trust me, would come with some benefit. They could tell you that this has 2 years warranty or this has something. So that's the reason why segregated funds could have an MER that is a little bit above what you would find on Wealthsimple, for example. But again, if you are clear on your goals, and I can still talk a little bit more on that. I'm passionate about talking anything money. Now, if your goal is very clear, for example, if you're in your 40s, maybe even 50s, maybe even 60s, or you're at a stage where you don't want to lose anything from your money, and you're willing to pay that extra. In fact, remove the fact that you're willing. If you really don't want to lose your money for whatever reason, that could be a choice for you to consider. And who says you can't have the two? You can have the two side by side. That's the simple truth. That's what I tell people. Depends on your goal. It depends on what you're doing. I can give you further example. Now, in your RESP, for example, I see a lot of people again, they keep this money there and nothing is growing your money. Hey, sisters and brothers on the call, you should be growing that money. Now, if you're worried to say, okay, I know the stock market is volatile, my money could go down, but my son is going to start school in the next 5 to 3 years, for example, or in the next 2 years, and you don't want to gamble with that money. You don't want to just put it in the market without being sure of what's going to happen when it's time for the child to resume school. Maybe you want to consider investing it through a segregated fund. So it's all being clear on your goal. That's why I tell people, don't hear that Mr. A puts money in bought this stock and you went to buy. You don't know why they bought that stock. And that's why I love what Sifao is doing tonight. She's really explaining the basics. Open a brokerage account. Go invest your money. Set it on drip. Drip is dividend reinvesting and all of that. But we will drill down through maybe a course if you're ready to walk into get serious with your finance here, into really knowing what stock should I buy, why am I going into the investment. They can then advise you, this is what you should be buying this time, this is where you should be looking at this time. Don't buy because Funke bought this, don't buy because Sifao did that, right? So I hope that is very clear. So your question that says which is better or which would you advise, there is no one straight advice tailored to everybody. It is tied to your goal, but now you know the difference between the two. The stock market is beautiful. There's no stock that goes down. There's mostly no stocks that would go down and not come back up. I mean, even the law of gravity, whatever goes up will come down, which is why we say investing is long term. But now, if you have that kind of goal or that mindset of, oh, whatever, please, nothing missing, nothing broken. You know that song. Now, we want to try to, you can leverage both and have the two work side by side. And before we move on again, I love the questions coming in. You guys, this is showing active participation. Amazing. Sammy Ruba says, sorry, I joined late. What app are you talking about? So Sifao, excuse me, guys. Sifao talked about you downloading a brokerage account, which could be Wealthsimple, Questrade if you're in Canada, Robinhood, Vanguard if you're in US. I don't know where Sammy Rubo is. If you can let us know, I would appreciate that as well. And if you're in the UK, you can use your trading 2-on-2. So these are basically just apps that allows you go into the stock market. When my granddad, I was very, I knew when my granddad was doing all the stock thing, my dad and all that. It used to be a serious thing where you go into the, you go into the, you say you are going to the stock market, like you're walking into an office to go
Clearing
and
house.
trade. Even back home, we would watch them on the news, on the floor. They will start telling us on the floor today, Nestle traded for this, Cadbury this. It was such an interesting thing to see. But I mean, with technology, advancement in technology, the whole artificial intelligence, the world advancing generally, we don't need that anymore. There's no bridge between us and the stock market. You can just open that app, and then the app gives you like an access into the entire stock market in the world. It's not even just in Canada. You can buy stocks on Wealthsimple that is trading in the US.
Yes.
So it's such an interesting time that we're in, and that's why I am so passionate, and we are both passionate to say, hey, what do we do as immigrants? How do we give back to people? How do we call people into this whole space to say, come, it's not that difficult. Come and invest. Come and, build wealth. Start something for yourself and for your family. I hope that answers your question. Alashe says, hi, how do you know which stock to invest in? Are they all the same? I'll let Sifao answer that. And I think you should let them know about your program at this point, because knowing about which stock to invest is such a very sensitive conversation that has to be tailored, right? Sammy
Yeah.
Robo is in Canada. So go ahead, download Wealth Simple or Quest Trade. Pretty simple, less than 10 minutes to open one. You just need to put your SIN. And I've also seen people ask me, why am I giving them my SIN? It's so private to me. I tell you that the accounts you are leveraging are registered accounts,
Yeah.
meaning they have the oversight, the monitoring, the eyes, the four eyes of the government, CRA especially. They want to see how you are using these accounts that they've given us to leverage in terms of maximizing taxes and keeping more of what we earn and all that. So they want to know what's going on there. That's how they're able to give you your tax credit back if you're using FHSA, RSP, whatever the name is. So think about it like that. You need to give them SIN for them to track these things. I hope that is clear. Can you please explain what a non-registered account is for when investing? I can take that as well if you want, Sifal. So
Yeah, you can.
and during Kende, okay. So I'll give it this simple analogy. So think about where we were back home, and I'm saying this because of the name of who asked that question. I believe that we're coming from back home, where we have our savings, we have checking accounts. We didn't have all these TFSA, RRSP, all of that. So the non-registered account is just like you having your checking account, like just an account that doesn't have no advantage to you in terms of taxes. You are not able to leverage any maximization of tax when it comes to your non-registered account. So you remember back then, I was in the bank, right? We had people come, they say they have check accounts. Whatever name we gave it, I remember there's one we had, they call it select accounts. It's just a glorified checking account for the high net worth individuals. We will still take the COT. We call it
Yeah.
COT,
Lots
the
of
$5
transactions.
per meal, or yeah. So we will still take that. So this non-registered account is like you just walking into a bank or whatever, open that account, and whatever you put inside, any tax that should apply to a fund that you're taking out in your brackets, in your tax bracket or in that type of fund, they will take it straight on as you withdraw that money. So if you were to invest in a non-registered account, say maybe you put $500. When you want to withdraw your $500 back, whatever tax that needs to be charged in terms of withholding tax that applies to you, maybe in your province or whatever, because Canada have different taxes, across the provinces and all, it will apply. That's the non-registered. And you should only consider non-registered when you have maxed out your registered accounts, not accounts, all the accounts, which is why you need to really work with people who understand finance. Because if you have finished maximizing TFSC, you may not necessarily run to the non-registered. You still have your RRSP that you can take advantage of depending on your situation.
Mhm.
So these are some of the things you want to, take advantage of first before thinking of your non-registered account. And I hope that also answers your question. Amazing, guys. The questions are amazing. I love the energy in the room. I see Fems. I see Amarachi. Hey, Amara, welcome. Welcome, welcome, welcome. Okay, so we will just move on to the last question on investing here. Tifa, what are some of the common mistakes you've seen people or that we've seen people? I know we've had chats, a lot. We have so many things that we've seen happen in this area. The common mistakes that immigrants make when they start investing. What are those mistakes? Maybe one, maybe two. Um,
Okay. Yeah, so thank you, and thank you for the engagement so far. Sorry, before you go ahead, I would like to answer that Ola Alashe's question, which is, how do
okay.
you know which stock to
Yeah.
invest in? Are they all the same? Stocks are not the same. When we started, we explained what the difference between a stock and an ETF is. So in the stock market, you can have a stock, which is you buying for an individual company. You're investing in just one company per time. Or you can buy the ETF, the exchange traded fund, which is a basket of different funds, right? Different companies are in that ETF bucket. Or we also have gold. Gold are sold as stocks as well. Silver is sold as stocks as well. They are
Yeah.
not all the same. Now, knowing the stock to invest in will depend on your goals. It depends on your risk profile because there are some stocks that are high risk. So if a low risk, somebody that is risk adverse, low risk, is investing in a high risk stock, that person is doing himself or herself a disadvantage, right? Because they are not able to withstand the risk. Now, if a high risk person is investing in a low risk investment, you're doing yourself a disadvantage yourself as well, right? So you need to know your risk profile. You need to know why are you investing, right? Am I investing to withdraw in the next 6 months? Am I doing this to get my money in the next 1 year? Or am I doing it for retirement? Right? It even helps you to know what type of account you want to use. So if I'm investing towards retirement, I'm going to be considering using my RRSP if I'm in Canada, right? I will not use TFSA because I'm investing towards retirement. So that is why you need to know what are you investing for, your profile, your goals, and why do I want to put my money in the market? As for are all stocks the same? No, they are not all the same. There are different types of stocks in the market. But you can know that when you check this company, you check the history and every other thing, they need to tell you the type of stock you're investing in. Okay? I hope I answered that question. Now,
Yes.
going ahead to the question you asked, you said, what type of mistakes are immigrants making, right? I guess that's the
Yes.
question.
Yes.
Okay. Now, the mistake a lot of people make is number one, I don't have enough to invest to start with. And I tell you that the app has even given you that liberty. Like you said, before now, when the previous time when you want to invest, you go to the clearinghouse, it might take you 1 week before your investment gets processed. But now, when you're eating, as you're eating, you can say, well, let me just buy a $10 stock. You can put it, right? But one mistake that most people make is, I don't have enough to invest. And I'm telling you, do you have $1 today? $1 is enough for you to put in the market and start that journey, right? The other thing that most people make is they try to chase hype. Oh, I've heard it from the mouth of 3 people on Instagram. Go and buy this stock. You don't know the reason why that person bought it. You don't know why they are telling you to go and buy it, but you rush to your app and you buy. And as you're buying it, maybe you buy it for $1,000. Before you close your app and open again, your $1,000 is 9,990. You're like, what? Let me sell it immediately, right? And you lose money. And that is why most people say they lost money in the market. I say for every loser in the market, if you lost money in the market, there's somebody at the other end that is making that gain.
Absolutely.
There's somebody at the other end that is making that gain. But when you understand why you're investing in it, it's good. There are most times I hear stocks on the internet. I go to do my research because I know I can do my research. I have the knowledge, right? I know what I'm looking out for. I'm not just going there because I've seen 3 people mention it over the internet. That means it must be a good stock, right? So most people do not want to learn the basis of investing. You don't want to learn the basis of investing. You do not see investing as a skill. Investing is a skill. It's a skill you learn. You can teach it to your spouse. You can teach it to your children, to your grandchildren, to your great grandchildren. It's a skill that nobody can take away from you. It's just as if you go to a college. You go to college to study accounting. I did accounting. If you wake me up from sleep and say, what is debit and credit? I know it. Nobody can take it off me. That is the same way with investing. When you learn it, not that you're chasing hype, you're just buying because somebody said you should buy. So that is another mistake most people make. And the third mistake I would say is you're selling your investment too fast. Before you see
Mm.
the results, you're selling it. Just in the example of, there was a day I was on a call with a client. We were setting up our investment portfolio. And right there, when we put the money started dropping. The money started dropping. And
Who's
it's not
laughing in the comments, guys? You guys, you guys, some of these experiences are funny, right?
when your money is dropping on the app, it shows you red straight. She's like, oh, this one is already showing red. It's like, just wait. While we're still on the call discussing, the money went back up and it showed green. I said, you see, that is why most people will, because you will panic. And that is the truth. If you see in the market, if you look at the chart is always wavy, right? There's up, there's down, there's up, there's down. If you see a stock that gives you a straight line, run. There's no stock that will give you a straight line like this. The price is constant, straight. You have to run for that type of stock. So, but if you stay in the market, you understand why you're buying. There are some stocks you will buy that will show you red for months. There was a stock I bought this month in short. No, in December. I bought that stock in December. For 1 week after buying it, that stock was showing me red. I'm like, Sifao, are you sure you made the right decision? But today, I think as at Friday, when I check my app, I'm ranging close to about 5% return plus. But just imagine that I didn't understand why I bought that stock. I've not done the graph. I will sell it because I tell you for like 1 week, it was showing red. It was showing me red that this stock is not, if it's somewhere that does not understand the market, the person will sell. I tell you, I don't sell my stock at a loss. No. I'd rather sell and break even. And how do you sell to break even? So the app has even given you the opportunity to put a sell for the next 90 days. So if I see that, oh, I've made a mistake on this stock, I'll just put my sell at my buying price. If I bought it for $20, I'll put a sell for $20 and fix it there for 90 days. So what I've given the system job. It's you that is looking for job now. The system will now start searching. Any day it gets to $20, the system will say, hey, if I will place a sell for $20, come and buy it. He buys it and oh, your order is now fulfilled. After 90 days, if it doesn't get to $20, it will cancel the order. I'll put it again. Do you understand? But if somebody does not understand the market, you get to like, oh, I want to sell it now. So this week, Nvidia was red this week.
Oh, yeah.
When the US and China wala was happening, Nvidia was red. Like in my WhatsApp chats, my community, people were like, hey, Sifa, what's Nvidia? Somebody was like, I want to sell. I said, don't sell. If you sell, I will remove you from this WhatsApp chat. I said, if you sell that stuff, except if I don't know that you sold it, I cannot be teaching you and you are still panicking in the market. So she said I was going to sell. Well, Friday I was like, is markets. All you Nvidia investors. But at that point, some people will lose money. So these are the 3 mistakes I want you to understand. Number 1, you don't have the knowledge. Seek for the knowledge. It's a skill. Don't think of it as, I just want to pay to get this. Think of it as if you're paying for a skill that can serve your generation, even generation unborn. Even generation unborn. Right now, I teach my kids that they even know about money, even more than me. Right now.
Amazing.
And that is what they will pass over. My dad taught me about money, and I'm grateful. Right? My dad taught me about money right from when I was 12. I read Rich Dad Poor Dad, Richest Man in Babylon. I understood investing right from that age, even when I was not earning anything. He taught me. I've passed it over to my kids. If my life, their grandchildren, I'll pass it over to them as well. So it's a skill. Learn it. If you don't learn it, you'll get burnt in the market. Don't chase hype. Don't say because somebody has gone to buy it, I want to buy it. Buy it because it fits your goal and it fits your risk profile. And thirdly, don't go out of the market too fast. Achieve the purpose for which you've gone into the market. Make sure you achieve that purpose before you get out of the market. So do you want me to talk about my program now or maybe later?
Yes, I think you should. We have 2 questions.
Okay.
But I think you should quickly touch on that so I can answer those 2 questions. They are pretty
Okay. Yes.
straightforward.
So right now, sometime last year, I've decided to launch a program that talks about investing, teaching you the basics. I told you when I started with $50. And
Yeah.
I'm saying I'm teaching you how to even start with $1, right? Start from where you are. 1 hour pay, mindset. I don't even want that $1. 1 hour pay. I want people that have positive mindset so that you can see
Yeah.
the future, right? 1 hour of your pay every week. Start with that, right? And in this program, we don't just go into investing. Because that is one thing that mistake that most people make again. They just rush into investing. We don't just rush into investing. We build your mindset. You build your money foundation. How do you build your money foundation? You start with your budgeting. You will be shocked at the hidden expense you would see when you do your budget very well. I'm not asking you to go and pick any other shift. Don't get another job. In that your current income, let's look for your first amount you're putting in the market. You do your goals, you do your profile, you know everything about yourself. Then you now learn how to invest in the market. Even if you hear it on the stock, this stock is doing well, you can research it yourself and understand why you need to go into the market. We have different types of stock. You learn about the REIT, which is real estate. You learn about the ETF. You learn about dividends investing and individual stocks that don't even pay dividends. Now, at the end, you'll get a community support. I just mentioned somebody in my WhatsApp that said I wanted to sell when Nvidia was going down, right? You
Yeah.
get support in the community, like minds, people that are also on that journey with you, that can hold you. Because if that lady was not in our community, I can bet you that she will sell. Because the panic was much, she would sell that day and make a loss. But because she was in that community, she saw other people. I also have Nvidia. Don't worry. Let's just be, you understand? Let's just stay in the market. Because of that community support, she was able to stay in the market. If not, she would have made a loss. So you also get the community support when you join the program. If you want to join, the link is in my bio. You can just click on the link and join.
That's amazing. And just before I touch on the questions here, just also tying back on your points, we need to know that there is the talking, but what's important is in the doing. So this is
Yeah.
a new year. Everybody is having so many, different goals set ahead of them. They have resolutions. You've said so much. In fact, I tell people that talk is so cheap. We can talk and talk, but it's important to implement. It's in the implementation that shows that yes, you are serious. So if you are serious to start building something, don't compare yourself just yet. Focus on your own. It is $10 you can afford on a monthly basis. Please go for it. I
Mhm.
mentioned about momentum. You want to start with the right momentum first. Then as you go along, your $1 becomes your $1, pardon me, becomes $2, and it keeps growing like that. But that right mindset and going for what you want and closing your ears to all the noises, you will
Yeah.
achieve that goal. There's an amazing question here that says, how do one manage emotions when investing? That's a big, big question. And that is the kind of example she gave about whoever was going to sell that Nvidia. For a real investor, if you want to know who a real investor is, when the market is down, we say when there's a dip in the market, that's when you jump right in, like you're going to swim and have fun because you are buying at a discount. That's how you look at it
Yes.
as an investor in
Mhm.
seasons like that. So I'm happy that you were there to guide whoever that was. And I am sure that that person will be grateful again because the fundamentals of the company is very, very solid.
Solid.
No need
Mhm.
to shake once the fundamental is solid. So let's go to that one question. Now, managing your emotions and investing. We're going back to the basics again. Why did you start investing in the first place? If your why is strong enough, even in life generally, I say to people, if your why is strong, because Christ didn't promise us that there's not going to be temptation. So you need to look
No.
at it from that angle. When the temptations are high, that's when, like, if the stock market is down, that's a temptation in the stock market. Now, when, like, you don't have any money, your money is going down because you know why you are saving. Your why could be because, oh my goodness, my family, nobody left any wealth behind for me. Me too, I'm not going to go without leaving wealth for my kids. What did the Bible tell us about? Sorry, I'm not preaching, guys, but we need to tie it back to our very core. Now, if you leave good inheritance for your kids, for your family, there is what the Bible says about that. Again, even for yourself, which is part of the reality we are facing here. If you don't build something for yourself now that you are strong, healthy, you can walk, when you grow old, it is not going to be the same story here. Here,
No.
the people who are in the old people's homes, whatever name they call it, seniors, I don't know, they have names for these things. The OAS they pay, which is the old age security, or whatever money you think it's coming. I've spoken to a lot of immigrants. You hear somebody say, oh, there's CPP for me now. Why am I disturbing myself? There's OAP. It's barely going to take you from feeding to even paying for your internet bills. And
That's
we
true.
spoke about inflation, which is a silent killer. So going to be able to buy you at that point in time. So it is important for us to understand what is your goal for going into the market. Am I going to build my retirement, or am I going into the market to just save to buy a house? Because we have FHSA, that's going to be a short term. Maybe
Yeah.
within 3-5 years, you've bought your house. So we can be talking about a different type of investment at that point. So if you put money in the stock market, it should be for long term. The standard is that if you're going to invest in the stock market, you should be thinking 5 years and above. What I tell people is if you have any goal for your 3 to 5 years, please maybe choose ISA or go through the seg funds. We've talked about what you don't want to lose any money in because you want to buy a house 3 years. The market can go down within those 3 years.
Mm-hmm.
Policies can change. There's economic downturn. There's a lot. Look at what's happening between US and China. It's a strong determining factor in the stock market. We've seen that in the past few months. It came back up again, went down. We're going to continue to see those candles, move up and down. But you need to know your why. If your money is not for the stock market, please don't follow others to put in the stock market. Maybe HISA would even work for your type of goal. So be clear on your goal and don't go checking your app every day. I've seen people, oh, they just call. There was a guy we set up the money, about just $12,000. And he called back. I said, it has gone down. You can't be doing this, you know. Oh,
Okay.
there's a call. Can you still hear me?
Yes, we can hear you now.
Okay, sorry. There's a call coming into my phone. You can't be checking your app every minute. If you are that person that if the stock goes down, your BP is going to be 200/50. I don't think the stock market is for you. We need to
Yeah.
be blunt at this point. So don't go into it. So don't get emotional with your money once you have invested by checking the right fundamentals. For example, also taking our course, doing our program. I believe that you have a strong, solid foundation to know even before you buy what you bought. So if the market is down at that moment, then you would even be telling people, hey, there's discounts, buy two, collect one free. You go right in and you even go and buy more at that point. Don't keep opening your app. Don't follow hype. All these things that she has talked about, they are so, so important. Because if I share my portfolio with you, you probably want to say, let you go and buy the same thing without knowing why I bought those things. And you run
Mhm.
into a mess, which is why it's important to know your why. Your goals must be clear. Your risk profile also must be clear. See, there are some people, if they lose all their money in the market today, they are not shaking.
I'm not checking.
Those people can go for those very high risk, aggressive investments that can give them 51%, 70 something percent, but again can also nosedive within a moment.
Mm-hmm.
So if you cannot bear those brunt, please don't go for it. I hope that answers that question. Now, the other question says, I love the room tonight. It's so engaging. You guys are amazing. How often should one invest? Weekly or monthly? I'm going to give you a straight answer. Now, you know your income. We talked about budgeting. When you do your budgeting, your discretionary income or what you call your disposable income, whatever it is that you have left, you can now decide by yourself, how much of this can I use to purchase my stocks or my ETF or my index fund or my REITs, or if it's the gold, she talked about those commodities as well, bonds, whatever. How much of this can I spare? How frequently is this money going to be coming? If it is weekly, go ahead. If it is bi-weekly, go right for it. If it is monthly, you're not comparing yourself to nobody. You're just doing your own thing. Go ahead and invest it. But we are preaching tonight to say, please start.
Thanks.
We are not folding our hands in 2026. If we can do it, you can do it. We moved countries. We moved from somewhere to here to start these things. So you can as well do it, especially if you have the right mindset. Oh, I love Floxy. Floxy is such an amazing engager on this live tonight. She says, thank you for that. I love it, love it, love it. Okay, there's another question. Can you please touch base on what you said about dividend earnings? Did you say one need to invest for 1 year consistently before you start earning? No, the answer is no. So I'll explain it again. I was explaining earlier that when you are choosing a stock, or when you are determining your goal, your risk profile, one of the things you want to tell yourself is, what am I investing for? I gave an example. In fact, if I'll give an excellent example, saying that she wants to start using her dividends to pay phone bill. What a specific goal. I need my dividend to be paying my phone bill, enough of all this charging from your paycheck, right? Now, once you have such specific goal and you want to invest in the market, you will now be looking for a stock or REIT or whatever the investment is that pays you monthly
Monthly.
dividends. I mentioned that companies in the market, some pay dividend monthly. I love the monthly one. I'm just whispering it to your ears. Don't say I said it. If it doesn't work for you, that's okay. Now, some pay quarterly.
Mm-hmm.
Some even pay yearly, right? So you want to go and buy the one that suits why you are investing in that asset in the first place. Sifao's own is such a sweet example. I want to pay for my phone bill with dividend, meaning there's no need to argue. I'm going for a company that will pay me monthly because
Monthly.
tell us or Rogers will charge you monthly for their
Monthly.
phone bills. So
Mm-hmm.
that's how you go into it. But when we're talking about those charts, those figures you see, the share price, the market cap, all those dividend yield, that's another topic I think we can take for next time or when you join our class, because you need to be able to interpret those figures. You need to know what to look out for that can tell you this company is doing well beyond what you can see on the
The
surface,
profit.
right? Because there are some fundamentals that tells you some companies seem like they are making money, but in terms of cash flow, they are not making money. Because revenue, your balance sheet is different from your cash flow statement. So these things are very important for you to understand. I hope that answers that question. So you can get dividend earnings monthly, quarterly, or yearly, depending on which works for your goal. Now, is it advisable to invest US stocks in RRSP than TFSA because of the withholding tax and less tax paid during retirement? Now, your questions are in multiple folds, and I will try to answer them. First, you can invest US stocks in your RRSP because there's a treaty agreement between US and Canada that allows you keep that withholding tax. They're not going to charge you if you invest through your RRSP in a US stock. But again, that doesn't mean that you shouldn't still invest it in your TFSA. Please, we're going back to the drawing board of your goals. Why am I investing? Do I need to prioritize my RRSP right now? Is it part of my goal? Am I investing for retirement? People invest for so many things. You're just the one thinking it's retirement. Some people want to travel in the next 2 years. They haven't seen the world. They want to see the world. So they will be investing into some kind of asset through an account. So yes, there's a treaty agreement between US and Canada that doesn't make them charge you if you invest through your RRSP in a US stock. But that's not a straight answer to say, oh, is it okay to only just be putting my US stock in RRSP? Because again, who says everybody's going to be in a lower tax bracket at retirement?
That's true. That's one thing we need
So
to discuss.
this is how we want to start thinking, right? Because some high earners, or if you have ambitious goals, you may not see yourself in a lower tax bracket, even in retirement. And what
Mm.
that simply means is that every money you've put in your RRSP from now, you will still be taxed at a future date if it's not even going to be more.
Oh,
Because all the OAS, all the CPP, all the income from your business, every other thing is going to be counted as income. And this will determine what tax bracket you would fall. So you really need to be clear. You really need to understand your numbers. You really need to know these figures to put things into perspective. So it's not a general rule on a call like this to say, oh, yes, it's okay to put in your RRSP. Again, if you invest in a US stock through your TFSA, for sure there is that withholding tax that will be charged to you. But I'm not going to say on the call, I mean, as a rule of thumb, that's a no, you shouldn't do no. It depends on your goal. It depends on why in the first place you invested in that US stock. And some people don't even mind paying that withholding tax because they just love some kind of stocks in the US. There are some beautiful stocks, I must tell you, in the US that pays very well. And some people may not want to prioritize their RSP because they are self-aware that this tax is not like I'm not going to pay it in the RSP. It's just they are keeping my, you
you
know
are
how you
deferring
promise your
it.
son that I will spank you later, you are keeping it. So things like that. I hope that answered your question here. We have very limited time left here. I love the energy in the room. I love that a lot of people really want to, this shows me that people are really keen about their finances. They really want to know. And why not? There's no profession you are today or business you're doing. Whatever you're doing today, I believe that financial literacy should be top on your list. If it has to do with reading books about money, listening to podcasts, following our pages. And by the way, if you're still on the call, you're not following us yet, please go ahead and follow us so that you can enjoy some of the values that we put out there on a daily basis, and of course join Sifau's class to even learn more and have a tailored guidance for your own particular goal. So let's move on quickly to credits. Credit is something very, very important in this country. Very important that people don't talk much about. And Jory, she said, thank you so much. Thank you to you too for engaging. We appreciate. Thank you. Okay. So credit is something that is so important, especially as newcomers, as immigrants. People don't understand the weight of it. And I get it. When I came here, I was like, why should I be owing? Why should I collect money that is not my own and be spending? But the way the system here is designed is so different that yes, it's not okay to take on debts. Again, it's okay to have the credit and build history, right? So I want you to quickly talk to us what this credit is and how can you build good credit score? Maybe just briefly. Thank you, Sumbo. She says this session is full of value. Woohoo! I love that. Thank you.
Yeah, thank you for
Okay.
the comments and thank you for the engagement so far. So,
Yeah.
what is credit? Credit is you using a borrowed money. Borrowed money. So, when you have a credit, they'll tell you have a limit of maybe $10,000. That means we're allowing you to borrow up to $10,000. It is not your money. But why is credit good? Credit good. Credit is good because you can leverage on credit in the right way. For somebody that has credits, right? If you have a credit and you have a good credit score, it means you can get lower interest rates when you maybe want to buy a house, you're going to get mortgage, you can get lower interest rates. You want to finance a car, you can get lower credit interest rate, right? Unlike somebody that has decided, well, I don't want to have credits because I don't like to borrow money, right? That person will not have a credit score, which means they do not have an history of how credible you are with borrowing money. So if you want to get a house and you want to get mortgage, it means because you do not have history, they've not seen you borrow and pay back. That means you get a higher interest rate because they assume that they are taking a higher risk on you just because you've decided not to use credit. Why is credit good? Credit helps you to build that score, especially when it's time for you to get that mortgage. Because I think mortgage is one thing that most people want to have, and especially that time. You might not want to finance your car, you might not want to finance education, but when it comes to mortgage, you want to finance it. And that is why credit is good for you. Now, the caution you need to know is when you have credit, it is not your money. Once you understand that fact that this money is not for me, right? I'm only using it as a leverage to create a credit score, to create a credibility so that the financial institution can see that, oh, this person is credit worthy. How do you become credit worthy? You've used your credit card, you pay it off, right? I used $100 this month, I pay it off. It shows that if they give you $1,000, you will be able to pay it off. That's you becoming credit worthy. Do not use your credit card for things, or don't use your credit card if you know you cannot pay it back. It's not, credit card is not for emergency. Oh, I need to repair my car. I go on my credit card. It is not for emergency. It is not your money. Have those two things at the back of your mind. It helps you to utilize your credit very well. When you pay off your credits, that means it shows that you're credible. Even if you can't pay off, at least maybe there are some months that things might be tight. Let's be realistic, right? You might not be able to pay off that month, but you get your statement and it says pay this minimum balance. At least try to pick up that minimum balance and work towards paying it off maybe the following month as money comes to you. Now, when you have your credits, to build a good credit score, try to maintain at least maybe below 30% of your utilization should be below 30%. So let's say you've been approved for $10,000, for instance. Utilization should be below 30%. That means you're utilizing about $3,000. Utilization in this sense means outstanding balance on your credits. Because it's possible I use the old $10,000 and I pay it off almost immediately, right? That means I've not utilized, I've utilized it, but I've paid it back. For what should be outstanding on your balance, let it be below 30% because it helps your credit score to be good. Now, when you know there are different type of credits you can get. So let's say you are the type of person that I don't like to owe. I don't like to owe. Yes, there's a credit card for you. It's called secured. Secured, I'll give the bank $10,000. Give me a credit of $10,000, right? That means the $10,000 I've given to the bank is securing the credit that has been given to me. Because I have that secured, that $10,000 secured, I can decide to pay, I can decide to spend my $10,000 on the credit card and decide to be repaying it back. That is secured for those that do not want to, you don't want credit on your name at all. But why will you take credit? Why will you take secured? Why will I put my $10,000 in the bank and tell you to give me a credit line of 10,000? No, now I would rather put that $10,000 in the market.
High
Let it be
value of
working hard.
money.
Let it be working hard, because I know if you give me the $10,000, I have it at the back of my mind that this is not my money. So whatever I want to use it to buy, I know, okay, I have $2,000 in my account to fund for this, but let me use my credit card so that when I use it, it builds my credit score, and I pay back while I bring down my secured money and put. But like I said, everybody with their own situation. There are some people that don't like credit, so take a secured one. We have the unsecured credit card. That's the one I just explained. That I'll take the line, I'll use it, I'll utilize it, however I pay it back. That means I'm not putting a collateral down for that line of credit. Then the last one, we have the ones that give you reward. That's the sweet one. They give you reward. So if I spend $1,000, they might say, we are giving you $20 reward. Let me tell you something. Do you know that I use canola oil? Every year I buy I think it's the 20 liters one. I buy it. I think I buy it maybe twice a year or 3 times a year. I use the credit on my leave me. I'm a financial person. I use
Yes, we love it.
I use the points from my card to buy my oil. There was a day that I told my husband, I said, please, my canola oil is finished. Please, can you just buy? He was going to Superstore. Can you just buy from Superstore for me? And I told him, I said, and I like to use my points to buy. He was looking at me that you use your points to buy oil. I said, stay down there. I make sure I gather it. I
I
gather
love
the
it.
points. When I want to buy the oil, I just bring out my credit card and I say, okay, it's now for you. It's now time for you to work for me. So you can have that type of credit card. As you're spending, you're also getting reward back. You know, the first one, I said you put your money down. The second one is unsecured. Just give me the line. I know when I utilize it, I'm going to pay back. The third one, there are some credit cards that will give you reward for every penny you spend on that card. That means they are giving you cash back. I spend 1,000. You tell me you give me $20. Why will I not take it? I'm just using $20 as an example, right? So these are the types of credit card or credits that are available out there. Now, when you're getting credit, there's a difference between a credit card and a credit line, right? A credit card is that card that they give to you. It's always approved almost immediately when you open your checking account. You get a credit card approved almost immediately. A credit line is like cash. You know, when you use your credit card, you go to the ATM to withdraw your credit card. You know they will charge you almost times 3 than when you use it on, maybe use it to shop on the POS, use it to shop
Yes.
online. You understand? By withdrawing that cash, and it's the cash that they pay last. So let's say you have $10,000. Let me use $1,000. Let's say you have $1,000 card credit on your card now. You spent $1,000. You now decide to go and withdraw $100. They will assume that $100 is the last amount you're paying. So if you don't pay everything in full, that means that $100 will be the last, and they'll be charging you almost times 2 interest. When it comes to a credit line, the interest is low. You also get a credit card. Because people don't understand that. There was a lady that came to me and she was telling me, I have a credit card of, I think maybe she has about $13,000 on it, and they are charging her 35%. You know, all these credit people that will tell you, come and buy furniture. I don't want to mention names, right? Not
Yes.
the direct banks. They were charging her about 35%. And I asked her, do you have a credit line? She said she has a credit line. Can you pay off your credit card now? She said no. I said, what you're going to do is go to your credit line, because you can withdraw cash from your credit line.
Yeah.
And you don't need to, credit card, you need to be paying that minimum balance every month, right? But your credit line, you're only paying the interest. So you can leave the principal there for as long as it is, but you'll be picking up the interest every month. I said, go to your credit line. withdraw the cash, go and use it to pay down that 35%. Because that 35%, just imagine, in 2 years, you will double it. The rule of 72, right?
Yeah.
I said, go and use it to pay that credit card. Now, put the principal in that your credit line. Now, decide how you want to tackle it because you've reduced your interest. That burden on you is reduced. Now, decide how you want to tackle it on your credit line. So, when you have a credit line, right now, you might be having huge debt on your credit card. If you have a credit line, use it as a leverage to read because your credit line will give you, I think, is a single digit,
Yes.
single
It's a
digit
single digit.
interest.
Yeah. Yeah.
Yeah, single digit interest compared to a credit card that will give you a double digit interest. You cannot compare the two, the type of interest rate. Credit is good. Remember, it's not your money. Utilize it very well. However, if you're already in that debt, you're already in that shackle, how can you come out of it? Don't just leave it there, right? Look for ways to come out of that credit. If it's you leveraging on your credit line to pay down on your credit card for so that the interest can reduce and you tackle your credit line and pay it down. But it is good as immigrants to build that credit. If not, if you want to get any loan, any interest, you want to do business, the interest rate they are going to charge you because they will assume you're not credit worthy. And because of that, you need to build it with your credit card. Yeah.
Amazing, amazing conversation tonight. The energy in the room, the questions, the comments, all the engagements. I see new people even joining, even though we're wrapping up very soon. I see Kemi, Arigbede, I see Fatu Lexus, I see 1913, I see Chinoms, I see I Candies. You guys are amazing. Thank you so much for joining. And then, like Sumbo said here tonight, that it's been, such a night of giving out value. And that's really what we want to do, giving out value, just saying those things that we know, those things that for example, I sometimes would sit down and I'm like, oh my God, I wish I got some information way earlier than I did. But again, I'm happy to give it back. And that's why we touched on a lot of topics here tonight, hoping that we will just get out of the hearing and, talking and talking to doing, to implementing, because that's when the change happens. That's when you can see a shift in your situation. And speaking on that credit card again, just to tie it much more, again, please, if you can automate your repayment, I will advise you automate your repayment. It is very important. I tell people that automation in this technology era beats discipline. Sometimes the body is tired. Sometimes you don't feel like you're not in the mood. A lot of us are emotional with money and all of these things. Oh, not much money today. Please let that debt stay there. But once you've automated it, it beats your emotions at that moment. It just does its job. Automation, again, like money is loyal. Money is loyal. Automation is loyal. You set it, it doesn't work. So set it up. Pay if you can, even above your minimum, if it's
Yeah.
possible. These things would help you keep your utilization at a very minimal level. Again, give you a very high credit score. There are so many things in this country you cannot do without credit. As little as buying a car, if you're doing your phone purchase, so much is tied to credit here that I didn't know when I came. And please, again, don't take any credit you just see. I see so many things here and I'm amazed. Sometimes I'm just baffled at how people take these things. You can walk into a Walmart store and then you
Yes.
see these guys walk up to you and say, there's a credit card of 10,000. You're just jumping up the roof like, oh my God, I've prayed to God that I needed money. This is my breakthrough. Hey, bro, that is not your breakthrough. You need to make sure that that credit is serving your purpose. She mentioned that there are rewards for every credit card. I'll tell you, I have 3 credit cards. They have reasons why I have those cards. If you love to travel, there are cards. There are some bank cards you will get that would avail you points towards your traveling as you spend. So again, remember, there must be a why for doing anything. If you want to sleep at 8 p.m. tonight, there's a reason why. Maybe you want to get up early tomorrow. If you're drinking hot tea or hot chocolate right now, it's because you need to keep warm. Just make sure you know that why. There are cards you would get here that allows you fill your tank at a cheaper rate.
Mm-hmm.
There are cards. I've seen ladies that I've spoken to. They love films so much. They love movies. They believe it's so boring sometimes here. And they go for the SIM card with Scotia. And they are able to get points such that they don't pay out of pocket to watch movies. They just use this card, just like Sifal use a card to buy oil. I need to go use my PC optimum to go buy oil maybe tomorrow. Sifal, you just gave me that. That secret there. Those are the things you should be doing. You need to be intentional and be strategic with your money. And that's why you see the difference between Mr. A to Mr. B, even when their salaries are not on the same scale. So it's really not about, oh, I'm earning so much money, so I have a lot. No, it's about you managing that money you are earning. You are making the money, you are managing it, and then you multiply this money. So I really do hope that everything we've said here. Oh, I see our Guinness Book record winner, the trailblazer in the house, guys. You guys need to welcome him. He won the Guinness award, the Guinness. I don't know what they call that thing again. Trailblazer will kill me tonight. I am so sorry. Yeah,
Congratulations.
congratulations. Yeah, so it's a Guinness World Record winner. Thank you for joining us. I see Omo Jegs. Yeah, that's our friend. Thank you for joining. Nari Zechi, thank you for joining. Guys, we hope that you have found value in the conversation tonight. We're still going to continue on this conversation. We really just want to come out there, tell people things that can change and cause a shift in their finances in 2026. It's not about getting the next job. I see people packing all the jobs. You're going to still pack the job and still keep the same old habits, and
Mm-hmm.
nothing is going to change. So these are the little things that can shift things around for you. Investing, building a good credit score here is very important. Being strategic about the kind of credit cards you have. And again, something came to my mind. A lot of us who have our credit cards on our phone and you are tapping everywhere. If you're not going to be disciplined enough not to tap everywhere, stop it. Go delete that that stuff you put on your phone, the Google Pay or Apple Pay and all that. I had that a while back. I took it off, but I think I'm disciplined enough now. Maybe I'll bring it back. But you know where you are, you know the state where you are, you know your triggers. So if it's going to make you continue spending, please keep that. And if you guys are not following us already, follow Sifal, follow myself at Finke Financials. Please also put in for our course. You would be glad you did. I will also add this on top of what I'm going to tell you tonight. I hope you take it away. It's okay to pay to learn. It's okay to pay to buy a book. It's okay to pay to develop yourself. Whatever it will cost you to invest and become a better person and become that person you want to become, please go ahead and invest it. Your future self would really be glad you took that step. So, guys, we've talked a lot tonight. Let's get into implementing everything we have learned here tonight. Now, Rizechi, thank you. She says, thank you for sharing, ladies. We're happy you joined the call. Thank you. The Trailblazer, I am glad you joined this call. I should go screenshot this and put it that the Guinness World Record holder joined our live. Thank you so much, sir, for joining. I appreciate that. Okay, guys. Any word from you, Sifao, before we go? And you guys feel free to drop any more things in the comments. We'll make sure we take that just before we wrap up in 2 minutes.
Okay. Yes. So my final word to you, just like I said, put 1 hour of your pay aside. And again, I like to use this example. Instead of feeling guilt, let's say I go to the store and I just see this beautiful top and I said, oh, I didn't put it in my budget this month to buy. You know, when you buy it and you get some, you just be feeling guilty. Why did I have to buy this stuff? Why did I have to buy this stuff? So instead of feeling that guilt, right, I'll just bring out my phone because technology has made it easy for me to invest. So the top is $50, right? I'll just bring out my phone and invest $50 in the market. While the cashier is checking me out, I'm investing $50 in the market, right? So it gives me that peace. When I want to feel good, oh, why did I buy this up? I'll tell myself, okay, after I've put $50 aside for my future as well. So you might want to try that as a takeaway from this evening. Again, if you've not downloaded your brokerage app, download it. There's a mindset for that. The mindset is when you download that app, even if you're not starting today, let's say you don't even have that $1, like we said, you're not starting today, download the app. When you download the app, each time you flip through your phone, the apps on your phone, you see it, it reminds you. But if you don't download the app, it's not in your face. You would not be reminded that you need to start investing. So download the app and start investing. If you've not started, start with whatever amount you are. And on credit, remember, it is not your money. It is somebody else's money that was kept in your care. So if you're using it, use it wisely. use it that you can repay it. Okay? Credit is not bad, it helps you. Actually, it's very good. Credit is very good if you utilize it properly and use it wisely. So thank you. Thank you very much for having me this evening.
Thank you so much, guys. Thank you for joining once again, wherever you are. If it's morning, good morning. If it's night, good night. If it's afternoon, who knows? Good afternoon. And happy Sunday, guys. Till we come your way next time. And be good and be safe out there, guys. Thank you so much. Good night.
Yeah, thank you and bye bye. Good night.